Are you thinking of buying a home this year and are overwhelmed with the high interest rates and skyrocketing prices? Josh and Brian here with the Linhart team at Coldwell Banker to discuss 3 hacks that could help you navigate through that this year.
I think number one, the most important thing to know is, where is this market at? Do we see it going down? Do we see interest rates going down? Is there going to be a better, more opportune time for you to buy? And I think that as far as everything we can see with the metrics right now, we don't see these prices really going down. It's really this thing, if you look at what interest rates did to home prices, which is really the fact of interest rates go up so that prices go down. That's really what the Federal Reserve is trying to do.
Yep.
And they did that in a huge way.
Went from 4 to 7% in 2022, the end of 2022.
Yeah, and that fall, really what happens is the fact that there was so little inventory on the market is sellers were able to really hold their prices.
Right.
And then as buyers went back into the market, prices started to go up again.
Yep.
So I think it's that idea that these prices are going to go down because it's less affordable for people hasn't really happened. And I think the biggest reason for that is the supply and demand, is the fact that we just have a low amount of supply.
Correct. There's too many buyers out there for what is there for inventory. We're so many millions of homes behind U.S. national that prices are going to continue to go up just because of the supply and demand issue.
Because there's going to be buyers out there. There's people that have to move, and that's not opening up a ton of inventory. So one of the metrics we use as real estate agents is this thing called month supply of homes.
Yep.
And how that is determined is based off of how many homes are on the market, how much buyer demand there is, and then how many months until that inventory goes to zero.
Yep.
So right now it's about 2.1 in our market.
Yep.
So anything below 5 months,
4 to 7 is generally your balanced market. So, if no homes were to get listed, it'd take 2.1 months and there wouldn't be a single home left on the market.
Even with interest rates at 7%, or even when the interest rates did skyrocket, we were just before then, we were at like 1.9. It's the lowest I'd ever seen it. So realizing it's still a very strong seller's market. So if it is a really strong seller's market and buyers are still out there, prices are really hard chance to actually come down until that number starts to turn into the 4s and 5s and 6s. Then we'll start to see it go down. And I think that, that's an interesting stat of what was it when the housing market was going down dramatically in 2009, 2010? What was month supply back?
So when I was, back 08, 09, I can remember seeing it as high, 18 to 24 months. I mean, we were a year, 2 years to clear off the full inventory, and that's why it just took so long for this market to correct itself. Is there was so much inventory out there.
Yeah, and I think that the other thing when it comes to interest rates how are interest rates affected? How are those going to be changed? And that's really determined on the Federal Reserve. The Federal Reserve controls the internal overnight rate. That then coincides with what mortgage rates are, right? So know that will always be higher whenever the internal rate is. And so that went down to 0 when the pandemic happened. So interest rates went down to 3%. Now, do we see a catastrophic event like a pandemic where the Federal Reserve is going to drop rates all the way to 0? No.
Nobody can predict it either. So
yeah, we couldn't predict it then.
Right.
We're not going to be able to predict it now, but also realizing that the Federal Reserve's plan is to hold interest rates. Now, they might go down a little bit. They'll drop them, but for us to think that, hey, we're going to see 3% interest rates and I should wait to buy a house when that happens just doesn't make sense.
No.
And I think that also going into that is, even if that does happen, if you have your house now, you'll be able to refinance into that rate.
Right.
So I think when we talk with people or buyers that are looking for interest rates to go down, it's like, if interest rates go down, what will happen to prices?
If interest rates go down, prices are going to continue to go back up. There's so much demand out there, and currently, unless inventory changes, that's what's going to happen. It's going to be the pandemic of limited houses on the market, and the buyer demand is there.
So how that happens is, if interest rates start to go down, people's purchasing power goes up.
Yep.
They'll bring more people into the market as buyers, or more buyers will be able to afford more. That'll make it more competitive in different price ranges to be able to push those prices up higher. The only way we really have for prices to go down is if we get a ton of supply from somewhere, which isn't happening. And also, I think the one thing that I always hear from people is like, well, foreclosures are going to start to happen again. And now you run a foreclosure file, right?
Yep.
So you work with the banks to list foreclosures. How many foreclosures have you had in the last 3 years? It's been like,
Probably a dozen. That's it. I mean, they're few and far between. I know just working with the asset managers and understanding their departments are dwindled down to very few people. So
we don't see a bunch of foreclosures
No.
happening. People aren't missing their payments. They have such a low interest rate, and also with so much equity in their homes, they can refinance to be able to help themselves out of
Right.
tight pinches.
Yep.
So I think that from there, the number two hack or thing to understand is, what does it actually take to buy a home? I think I ran into this with a friend recently where they assumed it took 20% down to buy a house.
Right.
So 20% down at the average home sale price, and let's say it's close in Minnesota to about $400,000. That's $80,000. So for a buyer to assume that I need to have $80,000 in cash before I can buy a house, that's not true.
I went to bought a house for a long, long time.
Long time. Long time. So I think realize that you do have a lot of financing options to be able to buy a house with little money down. Now I gotta use that as a relative term. So I think that, this FHA, which is 3.5% down, you can also get down payment assistance.
And there's VA, which is zero, can go down to 0% down. There's rural development that is 0%. So there are other programs out there where you can get zero down, or as said, FHA with down payment assistant programs. Sometimes there's cities giving money back to buyers to get them in houses too. So
Yeah, but I think it's the thing of, you do not need 20% down to buy a house. You really don't. The only reason why the 20% down mark is there is anything below there, you have what's called mortgage insurance. So mortgage insurance is essentially a cost on top of your loan. It's like typically between $50 and $150, $200. It really depends on your credit profile. But that is just the thing they put in with there, right? So now I look at it this way. If you wait until you have 20% down, right, because you don't want to pay mortgage insurance, right?
Yep.
And it takes you 3 more years to buy that house because you saved up for 20% down. So you don't have mortgage insurance. You saved yourself, let's say, $100.
Yep.
Now in the 3 years that you waited, our price is going to be $100 more per month.
Yes.
Yeah, I mean, I think that's the thing of like,
Yes.
the big thing when it comes to real estate, especially looking at it from an investor's perspective, is going, the longer you hold on to your home, the better off you are. So the earlier you can get in,
Yep.
the better off you are. So I think having those little hiccups to going, I don't want to pay mortgage insurance, I'm going to wait till I'm 20% down to purchase something. In the long run, you would have had a better option if you would have just gotten into the house earlier. And then I think there's obviously the other way that happens, which is the third strategy, is when it comes to, you have your house now, right? What can you do to be able to get a different interest rate?
So there's a couple different things. A, are you wanting to move? Because then you could keep your current house and refinance it, pull a HELOC out to turn it into a rental, or, just refinance the house if you want to, if you're at 6 or 7%, you want to bring it down, talk to your lender and try to do a refi. Especially a lot of times when you're with your current lender, they'll do a discounted refinance for you. So you're not paying the $3, $4, $5, $1,000 or the 1-2% that's going to take to refinance. That's an option. Or is that if you want to, get into investing, as you and I have both done with our first home, is, hey, I'm going to go buy another house and leave my first time home buyer. Maybe I have that at 3%. And I could continue to keep that 3% and go buy another house and use that as my primary. And now this is my investment house.
Yeah, which I did for my first rental property. That's how I had done it. And actually, all of these strategies are actually all the things and scenarios that ran through my head, because I bought a house about 6 months ago, and now interest rates are about as high as they've ever been.
Yep.
I bought during that time. I bought it with 5% down, and I got 2% in seller pays from the seller. So I bought a $600,000 house that cost me $25,000 to get into. So it's possible. There's ways to do it. And then also, now that I know, as interest rates do start to come down, because they'll go down from my 7% interest rate right now, they're about 6%. As they start to go down, I will get a chance to refinance this. And also for me, when I could have put 20% down into this, I'll take the $90 per month, that my mortgage insurance is.
Yep.
That's okay. from when I get a chance to refinance. And it was also to keep cash on hand to be able to do updates to the house. So what'll happen when interest rates go down, let's say a full percentage point, say I was at 7, let's say they go down to 6. Now it probably makes me in a good situation to be able to refinance. I've put money into this house.
Yep.
I'll get a new appraisal done on this house. So in theory, I won't actually have to put 20% down into the house.
Because your value will raise by the amount of work you put into it to gain you that equity to say, hey, my value was here because I bought the house that was on the market for a long time because it wasn't updated. So, I mean, one of our key things we talk about all the time with some buyers is buy the ugly house is, in terms we put it of buy it, fix it up. And now you have a house that's going to be worth more and a better investment in the end.
So maybe in a few months from now or next year, as I see rates start to drop, I'll refinance. And then I'll probably have my 20% into it, even though I only put 5% into it.
Yep.
My mortgage insurance will disappear. My payments will go down significantly because interest rate will go down a lot, right?
Yep.
That 1%. And that's when I decided to buy. I think the main reason to that is I don't see when this is going to be a better time for me. I don't see when prices are going to start to plummet and I'm going to be ready for it. I don't see when interest rates are going to be all the way down and that's the time for me to buy. I know I don't have a crystal ball, even from somebody who looks at the market stats all the time.
Right.
I know that my guess is as good as anybody else's, but all I knew was I can do this. I have the capability and I want to. I'll do it, and here's a strategy I'll do it to financially make the most sense for me.
And not be stressed out in a multiple offer when interest rates do drop down and prices are going up, and now you're in bidding wars. And I mean, with the current inventory where we're at, that's what it's probably going to be like again.
Those are 3 tips to help you navigate this housing market. Click our link below to get our free buyer's guide.